How do you avoid a surprise tax bill as a business owner? That's what we're talking about in today's episode of The Profit Biller Show. I'm your host, Parker Stevenson, CEO of the accounting firm Evolve Finance and the author of the book, Profit Pillars. Now, as we talked about in the last episode where we went over how quarterly tax estimates work, it's just a known thing that being a business owner, taxes can be stressful because there's so many rules and regulations around taxes, and it's hard to know what is applicable to you and what your obligations are as a business owner, which is why it's so important that as a business owner, you're working with an accountant that's staying on top of that stuff for you. But working with an accountant doesn't guarantee you might not be surprised by how much you owe in taxes, especially if you're working with an accountant that you're only talking to by the time you get to the end of the year. And by the time you're to the end of the year and it's time to start getting ready to file your taxes in the new year, you either saved enough money for taxes or you didn't. There's no way to rewind and go back and put more money into a tax savings account. Once you get to the start of a new year, what you owe is what you owe, and you either have the money to do it or not do it. So that's why for this episode, I want to just inform you as a business owner, how do you avoid getting a surprise tax bill? Because frankly, there never should be any surprises if you're doing the things as a business owner you should be doing to stay on top of what you're going to owe. So let's start here. The first thing you can do to avoid a tax bill is actually what we talked about in the last episode, assuming that we're posting these in the order that I'm recording these in. But in our episode about tax estimates, you learned that you are obligated to pay quarterly taxes. So if you're not doing so, talking to your accountant to get a plan in place so you can start paying quarterly taxes, that's a great way to avoid a tax bill because you're not going to wait until the end of the year to see what you owe, which when you go a full 12 months in between when you pay taxes, it's very easy to spend the money you should have been saving for taxes and then get into a tough spot when the new tax season comes into space or into place. So that's where getting on your quarterly tax estimate schedule, which you should be doing anyways, forces you to be saving money each quarter to make sure you can cover your tax bill. So then when you get to the end of the year, you just have to pay the difference. It's not some big tax bill. It's a much smaller tax bill because you've been kind of paying your total tax bill in installments throughout the whole year. So quarterly tax estimates is a great way to just, number one, be thinking about your taxes sooner and not letting all the money that you should be putting into a tax savings account or should be sending to the IRS, not letting that just sit there throughout the year, tempting you to want to spend it or take it out to pay yourself. And I know for some of us, depending on sort of what our money stories are, and I talk about money stories in my book, Profit Pillars, depending on what your money story is, maybe saving for taxes is really easy for you because you're a big time saver. But for a lot of business owners, saving for anything can be kind of hard. So we don't want to put ourselves in a position where we might not save what we need to for our tax bill. And that's where quarterly estimates can really help. Now, the other thing you need to do is make sure you have good bookkeeping, because the way that you can really keep a strong estimate of what your tax bill is looking like is by having bookkeeping, because bookkeeping is going to show you how profitable your business is every single month. So this is why it's so important your bookkeeper actually knows what they're doing, and you feel confident that they're capturing all the revenue in your business. You feel confident that they're capturing all the expenses in your business, because if those aren't accurate, your profitability is not going to be accurate. Now, ultimately, your accountant is the person that's going to decide what gets written off through your business in its entirety. That means some of the things on your P&L, the things that your bookkeeper is putting on the P&L, they may not write off all of what you see there. And there also might be things they can do to help you reduce your tax bill that has nothing to do with your P&L at all, your profit and loss statement. But you're going to keep a pretty good idea of what your tax bill is going to be if you have monthly bookkeeping, you're looking at your profitability, And your accountant can even go, you know what? Whatever you see in your profit, save roughly 25% of that, or 32% of that, or 40% of that, just depending on how much money you're making and what your full tax situation is, right? If you're married and have a spouse and they're a high earner, that's going to affect what tax bracket you're in. So these are the things an accountant can help you with, but your bookkeeper is the one that's ultimately going to help you see what is your profitability every month. And every month that goes by, you can ensure that you are saving the amount of money you need to for taxes by keeping track of what your profitability is each month. Now, the other thing that you can do, and actually I kind of cheated, I already said it, but I just want to maybe reemphasize this. You can ask your accountant, how much of my profit should I be putting away for taxes? Again, you might be doing your quarterly estimates, but especially if your business is doing way better this year than the year before, so your quarterly estimates aren't going to cover your full tax bill, knowing what percentage of your total profit you should be saving will ensure you have the money to cover your quarterly estimates, which go back and listen to that episode if you haven't listened to it and you're not sure what I'm talking about here. But you'll have enough money to cover your quarterly estimates and make sure you're putting money aside in a business savings account to cover whatever you might owe extra at the end of the year. So that's where, again, having a relationship with your accountant, so you can say, hey, accountant, based on the performance of my business, based on what my tax bracket was last year and all the things you were able to help me save money on with taxes, what percentage of my profit should I be saving so I have plenty of money to cover my estimated taxes and cover whatever my estimated taxes aren't going to cover at the end of the year. And I have plenty of money saved up to wrap up my tax bill at the end of the year. Your accountant should be able to easily put together an estimate of what percentage of your profit you should be saving. Now, you should also be creating a tax savings account. You can set that up in your business. So as you look at your numbers every month and you're looking at your profitability, you can put that money aside and go, all right, my profit was X amount of dollars. Based on what my accountant told me, I need to put X percent of those dollars into a tax savings account. You move it over to the tax savings account and you leave it alone until your accountant tells you to do otherwise. And the money stays in the business, so it's still there. So if you have a really bad month or a really bad quarter and now your tax bill just went down because you're less profitable, well, cool. Then you can take money out of that tax savings account to put it back into your business checking account so you can operate your business and manage your cash flow. But the tax savings account should be separate from your overall business savings account. We do want all of our clients at Evolve Finance to have 3 months of operating expenses saved up in their businesses, but that should also be separate from what their tax savings need to be as well. Because ultimately, when we get to the end of the year, we like our clients to be able to pay their taxes without dipping into their 3 months operating expenses. And I'm about to sneeze again. Excuse me. This podcast is not edited very much, so y'all just heard me sneeze. I apologize. So this is where, again, talking to an accountant, helping you understand what you need to save for taxes so you can see what do I need to keep separate from my business savings so you can have all the extra cash reserves you need to operate your business and be ready for your tax bill. Because what stinks is when you save enough for taxes, but only enough for taxes, and you pay your tax bill at the end of the year and you deplete your business of all of its excess cash. And now your bank account is looking really low and you're nowhere near your 3 months operating expense savings cushion that we recommend business owners have. That gets stressful. We don't want to be put in a situation where when we pay our tax bill, our business has no money. And that's where having 2 separate savings accounts can be really helpful. And again, tracking what our tax estimate is going to look like throughout the year will help with that pretty significantly. Now, the other thing here is work with an accountant that is monitoring your specific tax situation. They're putting a tax plan into place and putting tax strategies into place in your business to help you achieve the plan that they're putting together. Because if you are working with an accountant that is engaged with you and your business throughout the year, it's going to significantly decrease the chances that you are going to get a tax bill you're not prepared to pay. Because the one thing a lot of business owners don't understand is that if you want to save real money on your taxes, number one, you do have to have a profitable business. There's only so much you can do if your business isn't profitable. The rich get richer, so to speak, right? Because the more money your business generates in profit, the more opportunities you're going to have to save on your taxes. But if you want to maximize your tax savings with a strong tax plan, you don't get those tax savings at the end of the year. It's not like your accountant's just going to click or check a couple boxes on a form and now they just saved you $35,000 in taxes. It doesn't really work like that. A lot of the work your accountant needs to be doing to help you put these tax strategies in place for your tax plan, they have to start doing in the summer. You have to do this months and months in advance of when you actually need to pay your taxes. But if you're working with your accountant on those tax strategies and you're talking with them every couple months around where's your business at, what can your accountant do to help you save money on taxes way ahead of time, way ahead of the tax season, then they're also going to be monitoring, are you saving enough for taxes? They're not going to tell you to move money into some tax strategy if you don't have enough money to pay your tax bill. So this is where, again, you get what you pay for with an accountant. If you get to the end of the year and all you're doing is handing off your documents to your accountant and they're telling you how much you owe, then you can't be too mad at them if you have a big tax bill you weren't expecting, because you're paying for an accountant who's not going to engage with you throughout the year and give a crap about your tax plan or if you're saving enough for taxes. They're just a compliance support person. Here's the documents I need from you, business owner. I'm going to fill out the forms, file your taxes. Now, good luck paying this. And that's why a lot of business owners don't realize that paying more to work with an accountant who actually has your back, who's actually paying attention to what's going on in your business throughout the year and is actually trying to maximize your tax savings, that is invaluable. It's one of the best ROIs you can get on any business relationship in your business. Unless you have an ads manager who's getting you a killer ROI on your ad spend, your accountant is probably going to be one of the best ROIs you can get as a business owner, online business, modern small business owner. Like, the more money you make, the better ROI you can get from working with a great accountant. And a great accountant is likely not going to be the cheapest accountant you can find. Now, the last thing I just want to emphasize here that I think is important, we actually want our clients to have big, juicy tax bills. Now, listen to what I said. We want our clients to have big tax bills. That doesn't mean we want our clients to pay more money in taxes than they're financially obligated to pay. But if ultimately at the end of the year, you've implemented as many tax strategies into your business as possible to maximize tax savings without depleting your business of cash and putting your business in a really tough financial situation with cash flow. So your accountant is maximizing your tax savings and you're paying your taxes on time and you still have a big tax bill because of this. Awesome. Do you know what that means? It means you have a really profitable, successful business. And yes, there are tax strategies you can put into place that will help you build your retirement, that will help you build assets for the future, save for your future. But ultimately, and we talk about this in Profit Pillars, the way most online businesses, digital entrepreneurs, modern small businesses, the way you're going to make the majority of your wealth is by running profitable businesses with great tax plans to minimize your tax liability as much as legally possible, while also making sure you have a ton of profit left over. So you pay your taxes on that profit and then you go use that money to make more money. You put it into savings, you put it into retirement, you put it into real estate, you do whatever else with it that you want to do. There is this misunderstanding that if you're getting caught with a big tax bill, then you're doing something wrong. The only reason a big tax bill is a problem is if you're not prepared to pay it and there's a bunch of tax savings you could have put into place, and now you're paying more in taxes than you really need to. But there is this misunderstanding that like, oh, if you're got a smart tax strategy as a business owner, you should be paying no money in taxes. Well, the way you pay no money in taxes for most small businesses is by not having any profit. And if an accountant is running tax strategies, that's reducing your profit to the point that your cash flow in your business is terrible. You're always kind of walking a tightrope with your cash flow, and you're putting all this money into other vehicles, but you can't pay your personal bills and have the lifestyle that you want to lead. Then that's not very fun either. So again, big tax bills are not a problem as long as you've saved for that tax bill and you're prepared for it, and you've worked with an accountant to help you maximize tax savings as much as is responsible from a business cash flow perspective. So our most successful clients have big tax bills. They have tax bills that are larger than some of our clients' entire businesses, their entire amount of revenue they generate. And their accountant isn't doing anything wrong. But when we hear about billionaires doing all these crazy tax strategies, that's a whole different story. And also, you don't want to be putting tax strategies into place that are illegal, that some entrepreneur tells you, oh yeah, like this is what you should be doing, when they have no idea if it's legal. Like, we don't want to go to jail over this. We don't want to put our businesses in financial duress because we're getting too aggressive with our tax strategies. The way you make money is by generating profit, paying taxes on your profit, and then using the rest of your profits after taxes to build your wealth. That's how small businesses work. And again, if one day you get to sell your business, if one day you're making so much money that you get to put really sophisticated, complicated tax strategies in place that are being put into place by accountants who are going to charge you an arm and a leg to do, then great. As long as you're not breaking the laws, more power to you. But just know there's a lot of misinformation on the internet about taxes. So just because you have a big tax bill doesn't mean it's a problem. If you're prepared to pay it and you have an accountant that's minimized your tax liability as much as possible, pay your taxes, move on with your life, and use that money to build your wealth. If you are looking for a new accountant to help you build a tax plan for your business and your personal finances, reach out to us at Evolve Finance. Just go to evolvefinance.com, schedule a discovery call. It's free, and we'll let you know if we're a good fit for your business. And if you want to learn more about the financial side of running a business so you can be a better CEO and be a more informed and strategic business owner, then check out my book, Profit Pillars, anywhere books are sold online. But as always, thank you so much for watching and listening to the show, and I'll see you in the next episode.